Welcome back, my friends. Well, the list of tech companies laying off employees just continues to get longer. If you follow this channel, you already know that almost every couple of days we hear about yet another company conducting layoffs. That list of companies has included some of the biggest public companies, many notable tech names, and a lot of smaller tech companies that you may not have heard of. But the macroeconomic environment has changed dramatically. And so has the investment environment and the investor sentiment that underpins it. Wall Street analysts are no longer valuing tech unicorns based on the prospects for future growth. That is because the current macroeconomic environment is demonstrating that those companies are done growing. 2022 has been a very revealing year for the growth prospects of a lot of companies. For example, Netflix has lost many subscribers this year. Who ever thought that would happen anytime soon? Meta has now reported 2 consecutive quarters of declining revenue. And Wall Street investors are not sold over on the metaverse being the next big thing. One Wall Street analyst actually has a sell rating on Meta, imagine that. As we all heard, the Google CEO is expecting softness in the online ad spending market. Elon Musk has a famously bad feeling about the economy. This video continues our coverage of the wave of layoffs sweeping the United States. What does it mean for big tech companies? What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. In case you missed the announcements, just let me have a quick run through of the companies that have announced layoffs in the past few months. Online delivery startup GoPuff is cutting 10% of its employees. Actually, GoPuff laid off 400 employees back in March, and this current round is actually its third round of layoffs in 2022. Software giant Microsoft is cutting 1,000 employees. The Microsoft cuts are basically across the board, at multiple levels, and across many divisions. Microsoft will evaluate our business priorities on a regular basis and make structural adjustments accordingly, said a Microsoft spokesperson about the cuts. HelloFresh cut 611 workers' employees and closed their Richmond, California warehouse. The company needs to focus on newer and more efficient warehouses, HelloFresh said in a prepared statement. Beyond Meat is cutting 19% of its workforce. Demand for its plant-based meats is now in decline, and there are now cheaper alternatives. Clear Capital, real estate valuation company, is cutting 27% of its employees. That is a total of 378 positions in Nevada and California. Software giant Oracle cut 201 employees and moved its headquarters to Austin, Texas. This layoff comes just 2 months after the company announced a much larger layoff. Chip giant Intel is cutting 22,000 of its 113,700 employees. That is a cut of about 20% and comes as the company is experiencing a rapid deterioration in revenue. Shares in Intel fell by half in the past 12 months. Meta is closing its Manhattan office and is rumored to be conducting a stealth layoff of 15%. SoftBank is cutting 30% of its employees. This comes after the investment company lost $23 billion in single quarter. SoftBank has offices in London, Miami, and Silicon Valley. San Francisco-based DocuSign is cutting 10% of its 7,400 employees. For those of you not familiar with DocuSign, it is an electronic signature company. Wells Fargo Bank is cutting 36 in the next in its series of layoff rounds. In total, Wells Fargo has laid off 400 people this year. In a similar move, Google also alerted about 50 employees. Google cut half of the projects in its startup incubator called Area 120. But these cuts are rumored to be just a warm-up for Google, as the company is said to be conducting stealth layoffs over a longer period of time. Nordstrom is cutting 231 jobs at an Iowa distribution center. Gap is cutting 500 corporate jobs at its offices in New York and San Francisco. Drug giant AbbVie is laying off 99 employees. Fellow big pharma player Bristol Myers Squibb cut 261 jobs. Last month, drug makers Biogen and Teva cut 300 positions each. Twilio cut 11% of its 8,000 employees. CEO Jeff Lawson said that Twilio basically grew too fast with too little focus. Warner Bros. Discovery cut hundreds of jobs this month. If you recall, Warner Bros. Discover is the media company formed by the merger of the Discovery Channel and Warner Bros. That was divested from AT&T. Wall Street investment bank Goldman Sachs is cutting 5% of its employees. We have heard from a number of investment banks that deal flow is down dramatically this year. Banking giant Citigroup cut 100 employees from its home mortgage division. As you know if you have been following this channel, demand for mortgages is seriously down this year. Raging inflation and interest rate hikes have reduced mortgage demand. Credit Suisse is cutting 5,000 jobs as the international banking giant deals with the aftermath of a financial scandal. Snap, the developer of mobile app Snapchat, is cutting 20% of its employees, or around 1,200 jobs. Snap CEO Evan Spiegel told employees and Wall Street analysts to prepare for an era of slower growth. Bed Bath & Beyond is laying off 20% and closing 150 stores. Bed Bath is also taking on $500 million in new financing and is, in my opinion, basically on life support. Brand management company VF Corporation cut 300 corporate jobs and another 300 unfilled job openings. For those of you not familiar with VF Corporation, it owns Vans, Timberland, and The North Face. Mortgage company Better.com is having its third round of layoffs in the past 12 months. DataRobot, the Boston-based artificial intelligence startup, is making its second round of layoffs since May. DataRobot is cutting 260 of its 1,000 employees. Automaking giant Ford is cutting 3,000 employees in India, Canada, and the US. Boston-based Wayfair 5% or 870 positions. Apple cut 100 contracted recruiters because it is slowing hiring dramatically. HBO Max eliminated 70 jobs, which is 14% of its overall employee base. Signify Health, the Texas-based health services firm, cut 489 employees. The layoff comes as drug retailer CVS is expected to purchase the company. Calm, the meditation app company, is cutting 90 employees, which is 20%. CEO David Koh said, "We as a company are not immune to the impacts of the current economic environment." Nutanix, another tech unicorn, plans to cut 270 jobs or 4% of its employees. Salad maker Sweet Green eliminated 5% of its corporate jobs. Wix.com, the website design company, cut 100 employees in what is its second round of layoffs this year. Groupon is laying off 15%, which is 500 employees. iRobot, the household robot maker, cut 10% of its employees, or 140 positions. Online stock brokerage Robinhood cut 23% of its employees. Shopify, the e-commerce giant, cut 10% or 1,000 employees. Vimeo cut 6% of its employees. CEO Anjali Sud said, "We want to come out of this economic downturn a stronger company." Cryptocurrency exchange trader Gemini cut 68 employees. This cut comes on the heels of a 10% layoff earlier this year. Electric car giant Tesla cut 229 employees, shuttered its autopilot division, and shut down its San Mateo, California, office. You probably all remember high-profile CEO Elon Musk famously saying he had a super bad feeling about the economy and planned to cut 10% of his workforce. Loandapath, the California-based online mortgage company, cut 2,000 employees. Electric pickup company Rivian unveiled laid off 5% of the company, which is 700 employees. J.P. Morgan Chase, the largest bank in the United States by assets, cut 1,000 jobs. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.